What's happening? What's happening? What's happening? What's going on? 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 Y'all pull up on YouTube if you on IG. Pull up on YouTube if you on IG. Hey, what's happening? What's happening? What's happening? Let's get the pleasantries out of the way so we can get to it. Everything straight. Mic on. Forgot to check all of that. Um, for anybody that's pulling up for the first time and don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every day and just share my thoughts on the price action dealing with the stock market. Started out doing Tim's Tidbit by just sharing everything that I had in my noggin about trading, investing, stocks, futures, options, everything that I had in the Chrome Dome, shared it for the free 99. Not out and shared everything that I know. I just get on Al Gore's internet every day, twice a day, once in the morning before the market open, once in the evening after the market closes, and just talk about the price action. In the morning, we talk about overnight price action, talk about what we looking forward to for that morning. Then in the evening, we look back and be like, were we right? Were we wrong? Were we spot on? Were we far off? How did we do? Why do I do it? Because I want to show people what a full-time trader would do in any situation. And the only way I can think of showing you what a full-time trader would do in any situation is just to go live every day and show you in real time. That way you can say, hey, this is what a full-time trader would do. Because so many people want to be full-time traders. If you want to know why I say full-time trader, because I don't know, man. People think being a full-time trader is just going to be some magic wand that they can pull out and be like, exclamation pusta. And then their life just going to be so much better. It's not. It's hard and it's lonely. Yeah, it's for the free 99. Only thing I ask you to do is click the like button. If it's here on your screen, or if it's here on your screen, or if it's in the middle, like on my son's iPad, click the like button. That's all I ask you to do. That's all I ask you to do. You want to buy some merch? Go buy some merch. The new TLI.com. This is the shirt that started it all. I got options. I buy them, I sell them. That's the one that started it all. The cousin was like, hey, where can I get that shirt? I said, you can't, because I made it myself. So pull up the new TLI.com if you want some merch. That's the only sales tactics that I got. Now I'm done. All I want you to do is hit the like button and share it with a cousin. Share it with one cousin you like and one cousin you don't like, so we come together and build a new Wakanda together. What's going on? Let's see who in the chat. I already know Here to Learn and share in the chat. I told Here to Learn and share to pull up, to click on the link before we went live. Because I had something to say and she ignored me. She did not click the link. If anybody want to pull up, the link is in the chat. The link is in the chat if you want to pull up and ask anything. If you want to pull up and share anything. Yeah, the link in the chat. What's going on, Sonya? What's going on, Sonya? What's going on, Tap Skim or Tap Scheme? I don't know. Look, I'm saying Tap Skim. That's what I'm keeping it with. Cool it now. You better cool it now. Gabriel. What's going on, Gabriel? Kevo, what's happening? What'd say? You tried to, but it was not set up on your end. Okay, then. You are forgiven. You are forgiven. What's going on, Heinz Carter? What's up, man? I see a lot more numbers than I see names in the chat. Y'all drop something in the chat so I can shout you out. Let's go ahead and get right into it, man. What's going on, Kirk? What's happening, Kirk? What? Kirky. That's my first time seeing that name, Kirky. If you've been here before, I jalapies. But if you haven't been here before, welcome, my guy. Hey, Kirky, Here to Learn and share. That's the teacher's pet. That's the teacher's favorite. Be brown nosing and everything. Get used to it. Them just jokes. She is the teacher's pet, though. She the teacher's favorite. What's going on, Doc? I call him Doc because he's a real doctor. I don't call him Doc because I want to be like Bugs Bunny. What's happening, Doc? He's a real doctor. Shout out Doc Nolan. What's up with you? What's up with you? Let's get into it, man. Let's get into it. Doc, I seen you out there flexing on them, posting reels of your wife, talking some she don't mean to step on necks, but it just happened when you walk like that. I feel you, Doc. I feel Doc saying, hey, when you got this one right here, what else do you need, baby? What's up, J-Raw? What's going on? Trey, what's happening with you? What's up, man? Hey, y'all, let's get into it, man. Let's get into it. I don't want nobody to say, man, you just run your mouth. You ain't talking about nothing. Oh, well, if you don't like it, get off my live. I ain't said that one in a minute. Let's see what happened with the day. Hey, I ain't going to hold you. I looked at the market for about, what time did we get off live this morning? It was like a little after 10. It was a little after 10. I think we had just took this sell side right here when I got off live. When I got off the live, that's when I stopped watching the market. I ain't look at the market again until I came back up here, came in here about 4:30 or so when I was getting ready to make the thumbnail for this live tonight. And I look and saw, that the short that I was talking about this morning, the one where I was saying I wasn't going to trade it, but be careful. I was like, don't try to force no bullish narrative. Even though I'm bullish on the week, don't try to force no bullish narrative, because what we was trading at, we had a fair value, we had a breaking structure here. We had a 60-minute fair value gap right there. And I was like, we could very well sell back up to this and sell off. While we was on the live, we came up here and we touched it and we started selling off. I say anybody that took that short right there, this right here would be your low-hanging fruit, right? And then at the same time, I was like, this might be a crazy day, so take your 10 and go, because we was right here in this right here. I was like, if you already got your 10, take your 10 and go, right? It eventually got down to the low-hanging fruit and went a little bit lower, you know what I'm saying? But it was basically within this little range where it was trading. So that ended up being the trade of the day. Shout out anybody who took it. I didn't take it. I told you I wasn't trading today. I ain't doing nothing until after the CPI tomorrow, right? So I didn't take it. You know what I'm saying? I ain't trying to act like, you know what I'm saying, I'm a genius or I did nothing, but we was on live together when I was talking about it, and that's how it played out. That ended up being, you know what I'm saying, the trade of the day, in my opinion. You could have got in over here, but that's during the time when I don't trade. It's after 11:30, so you know what I'm saying, I won't even count that one to my trading style. This right here would have been a trade of the day for me if I would have taken it. But based off of the risk tolerance of this trade right here, I couldn't take it based off my risk tolerance anyway, even if I was trading. Because if you take this right here, the closest you would put your stop is above this swing high right here. And that's well outside of my wait a minute. Yep, that's well outside of my risk tolerance. That's over 10 points. Right? That's the only way I would have been able to take this trade is if I was taking it off the top of the gap, maybe the middle of the gap. Yeah, maybe yep. About right. Yeah, a little bit. Yeah, I could have taken it as low as 130. No, because I got to get up a whole point. So 40, 70, 5. Boom. That's the lowest I could have taken it. That's the middle of the gap. That's right back at the breaking structure. So even if I was trading today, I wouldn't have got picked up, because the lowest I could have taken it would have been right here at the breaking structure. So I wouldn't have got picked up anyway, even if I was trading. But anybody that took it off the bottom of that gap and that was within your risk tolerance, that would have been the trade of the day. The rest of the price action was just a whole bunch of sloppy mess. Why was it a sloppy mess? Like I say, I think the market is waiting on CPI numbers tomorrow. I think the market is waiting on CPI numbers tomorrow. Let's look at what it did and where it stayed. If it's a good thing or a bad thing, where we at, right? So looking at where we at, we still right here in this consolidation area. So let me put a line here, because when I shrink this up, it's kind of jumbled up with all that writing. I mean, with all that text. So I'm gonna put a line there so we can see where it's at. So we're right here at this consolidation from June, when we consolidated last time, waiting on the job numbers and the CPI numbers and the PPI numbers. We're right back at the consolidation, and I like the area that we're holding at, right? The area we're holding at is well above this low right here from May. It's well above this May low, the same low we was holding above last time, right? And over here, it's we're not coming down, breaking this swing low right here. We're not coming down, breaking this swing low right here. So we're staying up here. Oh, we actually got a swing low right here that I didn't even pay attention to. We got a swing low right there. I was focusing on this swing low right here because we got this right here is a potential order block right here. And this order block is doing its job. The top end of the order block did its job yesterday. And then the bottom end of the order block did its job today. Yesterday, we came down to about 50% of the body of the top of the order block. And then today, we came down to about 50% of the body of the bottom of the order block. So the order block then did its job 1, 2, 3 days. It then did its job 3 days, right? While we're waiting on these CPI numbers, right? The bears are unable to sell it down past this order block right here. So the order block is doing its job, right? So while it's sitting up here soaking up all this liquidity right here in this area right here, because it's going up and down, up and down, up and down. So when you're going up and down like that, all you're doing is just soaking up liquidity. You got people buying and selling up and down, up and down, up and down. You got people getting stopped out. You got people going long. You got people going short. It's just going up and down, up and down, up and down, waiting on the CPI numbers, right? They're waiting on the CPI numbers. So tomorrow, when the CPI numbers come out, this is going to be the determining factor what the market going to do. This is just what little Timmy Rogers feel. This is what I feel. Because the last time, and you know, history tends to repeat itself in the stock market. Last time, when we blast off and started consolidating, waiting for the CPI, PPI numbers, and job numbers, waiting on those numbers, we consolidate, we blast off, consolidated to cool off. When the numbers came out super hot, ping out, we went down, baby. Yo Street in a Range Rover. Back here, we had a bearish narrative. You know what I'm saying? The overall trend was bearish. We had a nice little bear market rally. You know what I'm saying? But everything was still bearish during this time. Even though we was in a nice little rally, the narrative was still bearish. Everything was bearish. We had a little bullish rally. But when the bad numbers came out, that bullish rally quickly came to an end. Payout. And everybody and their mama went to short in the market, right? That's, you can tell everybody and their mama went to short in the market because the market fell for 1, 2, 3, 4, 5, 6, 7 more days. And that's, what's that, like from the 8th, June 8th to June 17th, right? 7 trading days. So June 8th to June, so a week and a half. The market fell for a week and a half after the bad numbers came out, right? So now here we go right here. They're shifting the narrative. Everybody they shifting the narrative now. They trying to get you in the bullish mind frame, right? So now, yeah, shifting the narrative, that's good. Bullish narrative, that's good. Bullish bias, you know what I'm saying? We ain't got like a little short-term bullish sentiment right now. We've been bullish since June, the middle of July. We've been bullish since the middle of July. Nice little bull rally, right? That's all fine and dandy, right? But now, tomorrow is going to be to the determining factor which way we go. Well, Tim, why you say that? I'm glad you asked that question, little Timmy Rogers, because I don't know if y'all been listening to the Fed, but old Romy Rome, not Romy Rome from Martin, the other Romy Rome. If anybody don't know who I'm talking about, let me show you who I'm talking about. I'm talking about this Romy Rome right here, right? Where you at, Romy? I got a picture of you. I got a picture of Romy. Where Romy at? Hey, where my picture of Romy at, man? There you go. This Romy Rome right here. This is what I'm talking about. That Romy Rome right there. Romy Rome said, from now on, everything is going to be data driven, right? Romy Rome said, look here, man, I ain't saying nothing. I ain't saying nothing else. Every time I say something, y'all go to running back, reading tweets and pulling up tapes. Y'all a bunch of snitches, man. Y'all got everything on tape. Every time I open my mouth, you go back and say, oh no, wrong. That ain't what you said. You said this. So Rome said, I ain't saying nothing else. Everything from now on gonna be data driven. Everything, if we gonna decide to raise rates based off data, everything gonna be based off data. I ain't telling you what we gonna do. I ain't gonna say we gonna raise by 50 basis points. I ain't gonna say we gonna raise by 25. Everything gonna be data driven. You ain't gonna have nothing to rewind the tape on me. That's what Roman Ron said. And that's how he was looking over his glasses when he said it. He was looking over his glasses just like that. You know what I'm saying? Hey, but all seriousness though, Roman Ron said everything gonna be data driven, man. So what does that mean? That means they can't get caught offside. The Fed cannot get caught offside no more because Roman Ron said everything gonna be data driven. I don't care what me or any of these other Fed presidents say, everything gonna be data driven. So you can't try to catch us up in our words and say we don't know what we talking about. What data they talk about? They talk about these CPI, these PCE numbers. That's what they talk about. Everything dealing with this core inflation. You know what I'm saying? Everything dealing with this core inflation is going to be based off of that, right? And if anybody who don't know what I'm talking about, let me go over here. We're going to try to make this a quick little teaching moment. We're going to try to make this a quick little teaching moment, right? So when the CPI come out, right? When the CPI come out, they got two CPIs that they looking at. They looking at the headline CPI, which is the CPI month over month and year over year. These numbers up here, the top two, that's including everything. That's including food. That's including energy. That's including all of that stuff that the Fed can't control, right? The Fed ain't got no control over that, right? So it's too volatile for them to even try to control it, right? So that's the headline CPI, right? But the one the Fed really focusing on is the core PCI. When you pull out the energy and the food, right? That's the core PCI right there. So if this number right here, now if all of them super hot, it's going to be a problem. But this is the one, this 0.5 and this 6.1, those are the ones that the Fed really focusing on, right? If these come in line or better, oh man, that's going to be a beautiful thing for the market. If any of them, if all of them come in line or better, that's going to be a beautiful thing for the market. But this is really what the Fed focusing on right here. That the core CPI. That's what they focusing on, right? And so if you look down here, it tell you, oh, dig this right here. Let me pull this up. If you ain't never seen this before, you can go get this off the what's the name site. You can get this off the what's the name site right here. This right here, this show you what makes up the you know what I'm saying? They got like the CP, they got like the see down here how I say CPU and CPW, right? The CPU is like pretty much everything, and then the CPW focuses more on like certain types of jobs. I think it's like clerical type jobs or something like that. Go read up on it and see what it is for yourself. But the W stands for like, I think it's like a certain type of job that it's focus on, and the U is like a general, like I say, let me see, represents about 87% of the population. The CPU is more widely quoted of the two, although cost of living contracts for unions and Social Security benefits are usually tied to the W. Basically, I mean, because it's long history, monthly variation, blah, 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 blah. Yeah, so it's like this, the W focus on like a different type of job. I think it's more like on the clerical side that the W focus on, but the U, the U one is the one that people use the most because it focuses on more jobs. But when you look at that right there, it show you all the different stuff that's inside the CPI, right? So you got all items, right? All items That's everything, right? Let me see if I can put this side by side. Okay. So we got over here, we got like the come on. What is it doing? Why didn't it give me an option to put it to the oh, there it is. Okay. All right, boom. Oh, now it's little. Now it's little. Let me shrink this up a little bit. Shrink it up a little bit, make it a little bit too big. Okay, so you got your all items up here, and the last one came in at 9.1, right? And oh, let me get this a little bit. Can't see it. Why did it change? There you go. And get this a little bit better. All right. So you got your all items right there. You got your last one came in at 9.1 right there. And then you got your all items less food and energy came in at 5.9. If you look over here, you see your 5.9 right there and your 9.1 right there. You see what I'm saying? But this right here give you a breakdown of everything that's inside the CPI numbers. Just showing you, I was just showing you that it's the overall number, like the 9.1. It's like for all items, you got all items. That's the headline CPI, right? And then it came in at 9.1, right? And then for the month, it came in at 1.3. So you got 9.1 for the year over year, and then you got the 1.3 for the month over month, right? And then when you come down to the other one, you got your 5.9 for the year over year. That's the core. 5.9 for the year over year. And then for the month, it was 0.7 for the month. And you got your 0.7 for the month over month. Just showing that it's the same numbers, but this right here just give you a breakdown of what's inside the CPI numbers, right? So you got all items, and it show you, you know what I'm saying, everything that's inside the like the all items, like your food, your energy, emergency services. You know what I'm saying? Under that, you got electricity, utilities, piped, like gas services, right? And then you got all items less food and energy, right? So when you pull out the food and energy, what's inside there, you got like the commodities, you know what I'm saying, less food and energy. You know what I'm saying? You got new vehicles, you got used vehicles, you got apparel, like if you're trying to get your drip right. See what I'm saying? If you're trying to get your drip right, that's your apparel. You got medical care commodities. Then down here, services, less energy. You got shelter. If I'm not mistaken, I think shelter is housing. This like your housing. You got transportation services. I ain't gonna hold you. Don't know what that is. And you got medical care services. Like medical care stuff, right? I don't know what transportation services is. I don't know if that's like public transportation, cabs. I don't know what that is. I ain't gonna hold you, right? Go look. Do it say down here? Energy. I never read this part. I just look at the numbers. I ain't gonna hold you. I don't like reading. I never read that part. I just look at the numbers. But anyway, you can get this off of the site. If you go in there and just type CPIU and click on it, it'll be a link right there for you to download it, right? So if you want to look at this, you can look at it. But this can, you know what I'm saying, this give you I'm talking about this right here because everybody expecting inflation to have start peaking. They're expecting it to have start peaking. Cause peak right here. Look here, right? So with let me find my spot here. Okay, you 5.9 right there, then you 0.7. Okay, so here, right? We was like 0.6, 0.6, 0.5, 0.3. Then we jumped up 0.6, jumped up 0.7, jumped up 0.6, 0.6, then jumped up 0.7, right? So everybody thinking that last 0.7 right there, right? And was going to be like the peak, right? And the reason why they thinking that's gonna be the peak is because stuff is like slowly starting to taper off, right? It's slowly starting to taper off. I ain't gonna hold you. The housing, the housing wasn't trying to taper nothing. The housing was hot, but it stayed the same on these two right here, right? It was like 0.5, 0.5, 0.5, then it was like 0.6, 0.6. So starting to smooth out a little bit right there. Starting to smooth out a little bit right there. But it's like everybody thinking that this is the peak. And the reason why everybody thinking that this is the peak, because when you look at the like the energy and stuff like that, it started to come down. Like the energy started to pull back. All this stuff right here is lagging. This CPI stuff is like lagging. But when you look at what's going on with the commodities real time, everything's starting to pull back a little bit, right? Everything's still expensive, but it's not as expensive as it was. So this super hot 9.1, that's including this food and energy, is not more than likely what everybody looking for. You see what I'm saying? When I say everybody, I mean the feds and all the experts. They not looking for this to be 9.1 no more, because the fact that energy and food stuff has been pulling back, especially energy. Energy been pulling back like a big dog. You know what I'm saying? Like if you just look at the overall energy, just looking at what's the name? Let me pull up this chart real quick. Just looking at the overall energy sector, like XLK, right? Just looking at the overall energy sector, energy started pulling back in June. You see what I'm saying? It started pulling back in June all the way to the middle of July. You see what I'm saying? So it's been kind of dilly-dallying right there, and it's dropping back off. It ain't trying to rip back up to the upside. So since energy done fell off so much, you see what I'm saying? Energy done fell off so much. Yeah, it got a little bounce right here, but now it's pulling back again. So energy not showing any signs of trying to rip back up. Energy been pulling back. So that's why, you know what I'm saying? That's why the people that make more money than me, they expecting that 9.1 to be the highest we gonna see for a good little time, right? And then the food stuff, you know what I'm saying? The food stuff, if you look at the food, this right here, this number kind of pulled back a little bit. The food overall, it went from 1.2 to 1.0 from May to June. That pulled back a little bit, right? Food at home pulled back a little bit. People was getting greedy. They was eating out more. That went up. That went up some because they was charging more for the food out there. They were still doing the same old thing instead of eating at home. They were still going out, even though Chipotle was busting you in the head. Places like Chipotle was reporting, "Hey, we getting less sales, but we making more money because we done raised the prices on them." And they were still out there doing it. They still out there pushing. You know what I'm saying? Still out there pushing through it. But those are all the reasons in Lil Timmy Rogers' world, based off the stuff I be listening to, why they expecting these numbers to come down, right? See, they expecting the numbers to come down. They expect, last time it increased 1.3. This time they only expected to increase by 0.2, right? Last time it increased 9.1. This time they only expected to increase by 8.7. You see what I'm saying? Last time the core increased 0.7. This time they only expected to increase by 0.5. You see what I'm saying? Last time, now this one, they expect this one to go up just a little bit, right? The year over year. They expect it to go up just a little bit, right? Dead in the middle, pretty much. Matter of fact, it's on the higher end because you got 5.9 to 6.2. So they're expecting that to go up just a little bit. So all these numbers right here, long as they come in line, I think the stock market gonna be happy with that. Why would the stock market be happy with that? Because this gonna play into the narrative that the Fed been trying to push, that inflation is peaking. It play into the narrative of inflation is peaking, not saying that it's just gonna drop like a rock. Inflation is peaking. What we've been doing has been successful because it's starting to, what the term they use, it's starting to moderate. I think they call it moderate. Yeah, I think they call it I think that's the word they be used. But anyway, it's starting to help. And we're not affecting the job market, right? We're not affecting the job market. Cause I think the last time the job numbers, it was like they had like double the amount of jobs that they expected it to be. And the Bears and the Bulls, everybody loved that. When they had, you know what I'm saying? When it came out and they had double the amount of jobs, the market was going down because the Bears was like, oh yeah, the job market still strong, so the Fed's gonna keep on raising these rates. Cause they said, look here, the job market strong, we raising the rates, we ain't hurting the job market, so we gonna keep raising these rates at higher at a full 1%. That's what the Bears was thinking, right? And the Bulls was like, oh yeah, the market's still strong, even though the Fed pounding us with these rates, they not wrecking the job market. So what the Fed's doing is working. So yes, sir, let's go. We got more jobs. Everybody can't be right. Somebody got to be wrong, right? So we finna find out who was wrong, the Bulls or the Bears, when these CPI numbers come out tomorrow. I know. I ain't said nothing about price action, but this stuff right here, this stuff right here is a little bit more important than price action. All this right here play into the narrative. You know what I'm saying? What I always talk about, understand the narrative, understand the bias, then look for the setup in the price action, right? So this all play into the narrative, right? Hey, we trade and we invest, right? So when you're trading, it don't matter which way the market go, up, down, sideways. You know what I'm saying? You just wait for your entry and do what you do. When you investing, you wait for your entry and you do what you do. So this how you figure out the most probable direction the market gonna go, right? So what we gonna do? We gonna wait till 8:30 tomorrow and see what them numbers look like, and then we gonna start making our decisions on what we gonna try to do. Now, let's look at the highest probability motion. Let's look at the motion. Okay. We don't know what the overnight price action gonna do, so I ain't even gonna try to guess where we gonna be at in the morning. But if these numbers come out beautiful, you know what I'm saying? We got nice upside targets to shoot for. Come down here. If we trade up through the night or something, or if we just dilly-dally around where we close, we got some sell side liquidity down here that we never took. You know what I'm saying? So we'll look at all that in the morning. Once we start looking at it, we'll look at all that in the morning. Let's look at Spilene and see if we can see some nice targets on Spilene if the numbers come out good or if the numbers come out bad. I'll put the link in the chat one more time before I pull Spilene up. If anybody want to pull up and share anything, share. If anybody want to pull up and share anything, talk about something that I might have missed or overlooked or anything you want to add to the conversation, come on in and do that while we go check out Spilene, where you at, baby? Here I go. No, that ain't Spilene. It's still on XLE. Here I go. What's up, Spilene? What's going on, baby? Okay. Again, today we just stayed in the same range. This good for my bullish price action. I mean, this good for my bullish thesis for the week. We started out, I was like, hey, since I'm bullish on the week, I want to come back. I want to retrace back and stay within this little area right here. And we did just that. We stayed within this area right here. Right there where we was consolidating, the same area from over here. Right there. We stayed within this range. That's the biggest candle. Let's get that from the bottom to the top. There you go. From the bottom to the top of the range. There you go. So we stayed right in that range there. And if you look real close, we poked our head out just a little bit. Right there. See that little red tip stick? Y'all can't. I gotta make it bigger. Y'all still can't see. There you go. Now you can see that little bitty poke this head out of just a little bit to the top side. That gave us a new weekly high with that little bitty poke out right there. That little bitty poke out on the Q. Now on the QQQ, Oh man, the Qs did way more than Pope. Look at them. The Q, this the same high right there on the Qs, but the Qs was riding high above the whole area. So it's still nice bullish action on the Qs too. Everything still playing into the nice bullish for the week thesis that I had. Now the only piece that we need to come in line, is for the CPI numbers not to be bad. If the CPI numbers don't be bad, this bullish for the week thesis should play out. We should play out. And these the Qs. Let me get off the Qs. Let me get up. That's a good little spot to go to, the top of that fair value gap at 340. The low hanging fruit, 330. That looked like it's way too easy to get to on the week. The low hanging fruit would be 330. A nice target would be right there at the top of that fair value gap at 339.90. Let's just say 340. Close enough for government work. 340. That's a nice spot on the Qs. But let me get off of there and go back to my baby. Spotleen, where you at, baby? Okay. And then on Spotleen, the target, I already said this was before, was but these relative equal highs right here at 429.47. Right? 420, is that 429.47? 429.64. 429.66. 429.66 is the relative highs. That's the target. I had already said that one time before. Them the same relative highs I was looking to get to back in June when I lost that bet to Zay, when the bad numbers came out and tanked us. This time, if the numbers come out good, that 429.66 shouldn't be a problem. Remember, to birth a new bull market for the SPY, we need a closure above 434.60. That will birth a new bull market for the SPY. If the numbers come out bad tomorrow, I'm looking forward to finish out the week by testing this low right here at this daily fair value gap. This low, this breaking structure, I'm looking forward to come back and test that area to see if it want to be starting something, got to be starting something. But yeah, I see it. If the number's bad, I see it blowing past this breaking structure here, coming down, taking care of this fair value gap here, or take care of that one, blow past the breaking structure, take care of that one, come down here and test this breaking structure and this swing low right here to see if it want to be starting something. That's what I see for the downside if these numbers bad. But I'm bullish on the week, so I ain't even focusing on that right there. Get out of here, 100. Get out of here. Who else? Who be Gerald? Get out of here, Larry. All y'all bears, get out of here, you bears. We ain't gonna focus on the downside because we bullish for the week, right? So these numbers gonna come out good, and it's gonna come up here for the rest of the week. The target is above these equal highs at 429.66. Write it down on a piece of paper. I said it first. If I come out wrong, I get on here and say I was dead wrong. But I ain't doing nothing until tomorrow. What y'all talk about in the chat? Let me go see what y'all talk about in the chat. What up? What up? What up? Say what up to y'all. You better cool it down. What's up, Kashaya? Michelle Tucker? What's up, Michelle Tucker? What in the world does that say? Ping out. Oh, that's what I did. Ping out. You said, oh, B Money TV said it's a trap. What kind of trap? What kind of trap is it? What kind of trap is it? B Money TV. What kind? Pull up B Money. The link in the chat. Pull up and tell us what kind of trap it is. Because I don't care nothing about no trap. I don't worry about traps. Because I trade what I see. Pull up and share what kind of trap this is. Hit the link, B Money. B Money TV. Hit the link and pull up. The link in the chat. Pull up and share with us what kind of trap this is. I don't care nothing about no traps. I trade what I see. I say Jerome and What's happening, Millie Block? A Millie, a Millie, a Millie, a Millie, a Millie. What's happening, Millie Block? What's going on, Colleen? What's up, Brittany? Brittany, did I say something to you already? What's happening, Brittany? Robinson, you was like 4 hours late, Robinson. The show over. Yo, Stack say been relaxed, sitting on cash, learning ICT. I'm learning. Okay, that's what's up. That's what's up. Sitting on cash and learn. Hey, Stacks, tomorrow gonna be the day where you can figure out how you want to deploy that cash. I can feel it in my bones. We just waiting on them CPI numbers. What else we got going on this week? Let me see what else we got going on this week after them CPI numbers. After them CPI, and the reason why I say them CPI numbers, come on, man. I was just on here, man. Why does it do this every day? Do they run some kind of script at night? Do they run some kind of script at night on Econo Day? Because every night around this time it be doing this. The reason why I say, I already talked about that, but the reason why I say these this gonna be the deciding factor of what's going on is because the CPI and this PPI, because the Fed said everything gonna be data driven. Everything gonna be data driven because they ain't giving you no forward guidance of what they're gonna do. They saying everything data driven. So when the data that they looking at come out, that's gonna be the stuff that, you know what I'm saying, tell you which direction the market gonna go. CPI, PPI, that's the stuff they looking at. That's what they looking at. And job numbers. CPI, PPI, and job numbers. That's what the Fed paying attention to decide on what they gonna do with them rates. Pull up. What it was? Yo Money? Was it Yo Money? Pull up and talk to us. Let's discuss, man. Let's discuss. I don't be doing all the bull trap, bear trap stuff. You know, I'm not a bull or a bear. I'm a beast. The T-shirt said it. Here you go, right here. That's the motto we live by. The new TLR. If y'all want some merch, you can go to the newtlr.com. You see what this shirt say right here? See what that shirt say right there? Let me put it in white so you can see it good. I'm not a bull or a bear. I'm a beast. Hashtag Spider Gang. You know what I'm saying? Them words that we live by. Them words that we live by. I could have just did it like that. I'm not a bull or a bear. I'm a beast. Those words to live by. Don't get caught up in your bias. That's the whole premise of that shirt right there. That's why I made that shirt, to let people know not to get caught up in their bias. I'm not a bull or a bear. I'm a beast. Trade them both ways. Trade them going and coming. But that's what's up, Stacks. Sitting on that cash, waiting, being patient. That's discipline. Hey, Robinson, you made it. Ain't no guest appearance. You just late. And you ain't fashionably late either. No, we wasn't. Don't tell him that. We weren't waiting on him. Okay, energy was a big part of the last CPI print being so hot. Yes, it was. Yes, it was. Because the energy on the let's go back and look at that. And let's see why. Let's go to XLE. All right, well, let's go to SPY first. Okay, SPY. The hot CPI print over here was on June 9th, right? It was on June 9th, right? But that was the information from May, right? The information we finna get now is from July, right? Because it's August, we finna get July. The information we got in July was from June, right? The information we got in June was from May, right? So remember that it was from May. Now we go to XLE, right? Look at XL, look at energy in May. Look at it. This is from May. That's the month of May. Let's put it on the monthly calendar so you can see it. I just like making the noise. On the daily calendar, I can make the noise. That's May. That's May right there. Here go May 4th, right? Here go right there, May 31st. So that's why energy was so hot in this number right over here. Well, that's not SPY. But when we got that number over here, That's why it was so hot. Because back here in May, when the S&P was doing this right here, the S&P was steady falling. S&P was falling. But energy was running away from you. Energy was running, baby. Look at energy. Energy was running while the spy was falling down, baby. Yo Street in a Range Rover. That's why it was so hot. That's why the CPI, the headline CPI was so hot, because energy was running. Right? So now, during the last month of July, it came down, it came up. You know what I'm saying? So we right in this little range right here. It's kind of, it popped up a little bit, but it wasn't running. It was just like in this little range right there. So that's why they expecting it to be tapering off, not continuing to go up. That's why they expecting it to pull back. You know what I'm saying? They expected it to pull back some because it's been in this little range right here. And the prices of stuff starting to come down a little bit. Gas might have went from $8 a gallon to $6 a gallon, or $8 a gallon to $7 a gallon. Or if you in Georgia, it might have went from $4.75 a gallon to $3.50 a gallon. You know what I'm saying? But it just came down a little bit. It's still hot, but it ain't, you know what I'm saying? It ain't like it was. Oh, what's up, Tranisha? When you pulled up in here? Hey, when my sweetie came in here. What's up, baby? I thought you was on your way home. Baby. Fed Reserve speaker come on. On the come up tonight. Oh, yeah? Okay. That boy can sing. Hey. Yeah, I think that's all I got, man. If don't nobody want to pull up, I think that's gonna be it. If these Fed numbers come out good, my bullish week activity playing out to like I wanted it to. I said I wanted to do like a pullback on Monday and Tuesday. That's what we did, right? I said it'd be nice if we made a new high, a new weekly high. We did barely, poked our head up, and then we started to pull back on Monday and Tuesday. So we made a new daily low. Like I said I want to stay within this range. It did that. We stayed within that range. So now all we need are the new numbers, the good numbers to come out, and we'll be able to push up. Oh, before I leave, let me show you one thing that Dustin shared with me. I didn't take a screenshot of it. But he did it on his video today, and he was showing historically what the market do during CPI, like what it do. Dustin always be hitting you with like the gems, right? Let me see if I can find it real quick before I get out of here. Let me see if I can find it real quick before I get. I know some of y'all want to go look at the come up series, cause somebody Robinson put it in the chat. Oh, we just go watch the come up, then, Robinson. You was late anyway. Shout out Dustin Tidbit, Dustin and Eric. Those are my financial advisors right there from Jazz Wealth. This the video right here. Let's see if I can find it real quick for you. Let me see if I could. Let me do it. Let me try to see if I can do it where you can hear the sound. Share. I got to do share Chrome tab. Okay. I think it was around this time right here.
Ta-da.
Okay, here it is.
So we're showing two different things here because there's a difference between what's happened on average over the last 10 years.
This one here talk about the CPI, like the inline. This like when it come in line with what they expect, right? Greater than what they expect or less than what they expect.
It was just as expected. The stock market gaps down up 5 basis points over the last year. That's not percentage, that's 5 basis points, 0.05%. If if you look back over 10 years there, whenever we have an inline inflation expectation, the market gaps up by about 0.1% or 0.09%. I want to say it that way or just round up. Here's the interesting one. When the inflation numbers come in greater than expected, the market gaps down an average of a 0.5%, 0.5 essentially if we round up. So we don't want to see that. That leads to negative performance over the last year. It's very easy to go look that up. Over the last 10 years, what still doesn't like it, we got down by about 0.25%. And historically, if you look at this one here, I don't have this chart in front of me to share with you, but historically, when inflation numbers are worse than expected or greater than expected, the stock market gaps down by 0.25% and immediately tries to gain that back, but unsuccessfully. Right? So I just wanted to share that with you.
So basically, what he's saying is, right, if the CPI numbers come in line over the past year, it's led to 0.5% gap up, and over the past 10 years on average is led to like pretty much a percent gap up if it come in line with what they expect. If it come in hot, right, if it come in hot, it ends up being a gap down of 0.5%. Over the last year, it's been a gap down. And over the last 10 years, on average, it's been 0.25% gap down. And then, like he say, based off the stats that he had, it tries to immediately recover it, but it fails and still sells off. So, if it come in line historically, based off of what it did all last year, is led to a 0.5% gap up. And over the last 10 years, on average, it'd be close to 1% gap up. And then if it come in hotter than expected, it lead to roughly 0.5% gap down. And then the 10 years on average is 0.25% gap down. So that's just some stuff that he shared on his video today. Like I say, that's Dustin Tibbetts, one of my financial advisors at Jazz Wealth. He all about teaching. He all about sharing stuff. You know what I'm saying? Like he shared something with us before. I don't know if he'll get mad at me for sharing this right here, but I'm sharing it anyway. But this is just this is like the average performance of like the over all the past recessions. This is the average performance. Like the blue line is the average, the light blue line or grayish color line is the median. And so the red line right here is when we stop having positive GDP, right? This right here is 256 days prior to leading up to when the last time we have positive GDP, right? And you see the market goes up and then it starts to like kind of level off because I guess like the CPI information might be showing, hey, we running hot. We need to start cooling off. So the market start cooling off, right? This is the last line of positive GDP, right? And then this is the 2 negative quarters of GDP. You see what I'm saying? This is the 2 negative quarters of GDP. And you see how the stock market on the median is falling, on the average is falling. And then this gray area right here, this is when the recession gets announced based off of the 2 quarters of GDP. This is the this is the technical recession. Once it get announced, as you see, most of the time, the market already started recovering because it's a difference between the stock market and the economy when it comes to recessions. You see what I'm saying? When it comes to the recession, it's a difference between the stock market and the economy. Out of every recession except for one, if I ain't mistaken, I can go back and look at the data that he shared with me. Every recession, once they announced we was in a recession or once we was technically in a recession, the stock market had already started recovering. But the economy was still in bad shape, but the stock market had already started recovering. Does that mean that this over here is the bottom? I don't know. But based off of history, it's a very fair chance that we have carved out a bottom based off of history if the stock market continues to go up, right? This is a very good chance that this is the bottom based off of historical performance, right? the odds are on our side of this being the bottom based off how the stock market reacts to recessions, right? We've had our 2 negative GDPs, like we ran up, we ran up, run up, started tapering off right here. See how we was running up, started tapering off here, and then this was our 2 negative GDPs right here. And right around this time right here is when we officially, we technically hit a recession, right around this July time frame right here. So the gray line would have been starting from the chart that Dustin shared. Did I close it? Yeah, I closed it. But anyway, the gray box would have been over here, like when we technically got into the recession, right? So if it follows history, then it's a great chance that this may have been a bottom. Does that mean we're never going to go back down? No, we can very well fall all the way back down here, like I was saying, and this still be the bottom. You see what I'm saying? We can drop all the way down to here to this gap up right there, and this will still be the bottom. If we came all the way here and then turned around and went back up, that will still be the bottom. That don't mean we will never go back down. But in little Timmy Rogers' world, when these CPI numbers come out tomorrow, if they good and we keep pushing up, any pullback to a level that I'm watching will be a valuable pullback. That's all I got, man. It's 8:26. I know some folk only see the YouTube. Because I was sharing the Chrome tab. I forgot. I was sharing the Chrome tab. I wasn't sharing the actual window. I was sharing the Chrome tab so that y'all could hear the sound. Yeah, because if I don't share the Chrome tab, you can't hear the sound. But all I was saying was, if you see how we was coming up, we was running up, and then during this time right here, we just, from here to here, we kind of cooled off, we kind of leveled off. We ran up, kind of leveled off. Let me open up the other thing real quick. I know some folk want to get out of here and go watch the Come Up series, so I'll put this up like this right here. Let y'all get out of here. So these little things kind of small there. Can't really see it. Let me stretch this over a little bit. All right. So like the 256 days before the end of positive GDP, you go up and then you level off, right? So we was going up. Here go January right here, right? Boom. That's January. So we was running up, and then we started leveling off right here. We leveled off, right? And then this is the end of positive GDP right here. Boom. So then we got the 2 negative quarters, right? We got the 2 negative quarters right there, right? So we had that one, and we had this one and that, well, whatever it was, wherever it is. Yeah, this one and that one right there. The first and second, right? First quarter, second quarter. These are 2 negative quarters, right? And then so the last one would have been right around here. This would have been the red line, this red line right here. Right? No, the red line is right here. So that's the red line, and this is the gray line over here. So the red, let me put a line here. So this right, vertical line, let's come to January. The end of December, boom. That right there is the red line, right? That's the red line on that chart right there. That's the end of the positive GDP, right? I mean, positive, the GDP right there. So then we come over here, and then this right here would be, let me turn this snap off. The gray box would be over here. Come on, click. The gray box will be over here. Right there. Because like June, July sometime is when we got our technical numbers. So we got the 2 negative quarters, and that's when we got our technical recession. So based off history, looking at history, if it repeats historically, it's a very good chance that this is the bottom, right? It's a very good chance if history repeats itself again. And out of all the other recessions, there's only been one time when the bottom that had already been made once the recession was official, that wasn't the bottom. It went and made a super lower bottom. It's only one time out of all the other times. So the odds are on very well on the side of this being the bottom. Is it the bottom? I don't know. I'm just looking at the data, based off the history, and just want to share that with y'all. I'm gonna let y'all go ahead and go. So if you want to pull up and look at the come up series, you're welcome to do that. I'll see y'all in the morning. At 9 o'clock for the overnight price action. It's been real. If you've been on here this long, hit the like button on whatever side of the screen it is. Hit the like button. And share it with one cousin you like and one cousin you don't like, so we can come together and build a new Wakanda together, man. I'll see y'all in the morning. Y'all take a brain break, get away from the market, enjoy your families, enjoy your dinner. And I'll see you in the morning, man. Gone.